So this is the 4th anniversary of my income tax relief video because I have been repeating this video since 2021 talking about my income tax relief and see if they apply to you because what may apply to me may not apply to you. And the purpose of this video is really to inform some of you that some of this tax relief that you may not have even known about and some of it needs to be applied as well. So let's see what are the income tax relief that I'll be using on myself. And also if you want a finance focused community of over 18,000 members, then head over to our Honey Money SG Telegram group to join like-minded people interested in building their personal finance. Let's talk about the non-CPF tax relief first because these are the more easy to qualify ones, starting with earned income relief. So I believe that for those of you who are below 55, you will automatically get this earned income relief of around $1,000. Anyway, it's fully automatic. There's nothing for you to apply for, but for those age 55 and above, then you all will have slightly more, I think, for earned income relief. So depending on your age bracket. Now let's talk about the next relief, which is NSmen relief. So NSmen is more for those people who have served their national service and in particularly their in-camp training or any other forms of NS activity like mobilization. Then you will be considered as, active year of NS. Then you'll get $3,000 if you are below 3rd sergeant rank. But if you got no NS activity for that year, I think you get like 1,500. So if your rank is higher, like you have a specialist, WASI or officer position, you get slightly more lah, depending on this IRAS tax table that you can refer to. Also, if you are the Singaporean wife of the NSmen or you are the parent, then you also enjoy some slight tax relief as well. Not much lah, but still better than nothing, right? Considering your son or your husband is an NSman. And of course, all this is automatic because MINDEF will submit these details to IRAS anyway, so don't have to apply. I think the next one is what you have to apply for, and that is parents' relief. Now, at least for the first year, you will have to apply for this parents' relief. Now, what happens for this parents' relief is that firstly, your parents have to be 55 and above. Secondly, they do not have an income exceeding $4,000. And when I say $4,000, it's $4,000 per annum, not $4,000 per month. Okay, and definitely this relief is for people who are trying to financially support their parents without a high income, like $4,000 per year, which is really low lah, almost nothing. So there are two types of parents' relief, which is when you're staying with parents or when you're not staying with parents, because when you're not staying with parents, you get up to $5,500. But if you're staying with them, then you can get $9,000. So for myself, I should be getting the $9,000 parents relief because for the first 11 months of 2024, I have been living with my parents. But let's say if your parents are already handicapped, then you do enjoy a further tax relief. We are talking about $14,000 for those of you who live with your handicapped parents, and for those who do not live with your handicapped parents, that will be $10,000. And all this parents relief is by per dependent, so depending on how many parents you're supporting. Also, one more thing to note for parents' relief is that it can be shared among siblings, but it should not exceed the limit of the tax relief. So if you're asking me what is the logical way to divide among siblings, usually they split equally, or they just give to the highest income sibling, then the highest income sibling may want to give out some benefits to the lower income one. Ultimately, all this is just family matters that I cannot judge. So it depends on your family nucleus. How you want to arrange it is your own pasar. So last year in 2023, year of assessment 2024, that was the first time I applied for this parents relief. And then I guess for this year's income 2024, which is year of assessment 2025, I guess I don't have to apply for it anymore because IRAS stated that it will be automatically included in the following year, provided there is no changes. Then next year it will change lah because I move out and not living with them, then probably I will downgrade it to the $5,500 tax relief. So all this you have to confirm with IRAS lah. Okay, next up is the SRS Relief. SRS stands for Supplementary Retirement Scheme, and I've covered a lot of SRS content on my channel. Basically, it's a tax deferment scheme, if you can say it like that. You're trying to delay your retirement funds so that it can amount to a greater mass and then you withdraw during your retirement age, which is the statutory age of 63 now, maybe increased in the later years. But what I did contribute to my SRS this year was just $7,300 over dollars. And the majority of these funds are invested in the Endowus, Blackrock, iShares, S&P 500, short form IE, which is the unit trust that is tracking the S&P 500 because I want to put it into market that's tracking the S&P 500 index. So my entire SRS contribution this year is just invested fully into the market. I do have some existing positions not within the investment zone. It is with the Great SP by Great Eastern. It's a short-term endowment plan which is scheduled to mature in 2026, but I will not cover that. And you may have realized that I did not max out my SRS contributions this year, which is $15,300, because my tax is already fully optimized at this level. So it's really for my own level, I decide what is optimized for me. Your level may be quite different. Maybe you don't even need SRS at all, or maybe you will need the max contribution of SRS. That is what you have to calculate for yourself. But what can you do with SRS is really quite limited, because you cannot like really go and buy US stocks and ETFs, right? All this is just limited to Singaporean platforms that provide you what you can invest with your SRS. Of course, it is much more lenient than CPF in terms of the offerings, but I felt that if you really want to take advantage of the market, especially for the bullish market, right, you should be looking at worldwide investments. And one of the best platforms to do that is through Interactive Brokers, because they offer the best exchange rates plus the widest market offerings, including London Stock Exchange counters like your CSPX, your SPY-L, which lowers your dividend withholding tax. So you can sign up for Interactive Brokers using my link here. Now let's move on to the more exciting part, which is CPF Relief, because there is a lot of permutations, commutations, and people who are for and against the CPF. But let's talk about the mandatory contributions first. Everyone cannot run away from mandatory contributions. So for most of us who are, below the age of 55 range, we are contributing 20% of our income, plus the employer will contribute 17%. So if we just include for income tax relief, it is only the 20% of our annual gross income, which for me is around $85,000. So this $85,000 is split between $72,000 ordinary wage and $13,000 additional wage. Also, if you have forgotten, the CPF salary limit is going to be raised to $7,400 next year, which I'll do a separate video on it to remind people what is going to happen and clear some misconceptions around the air. So if you want that video soon, just comment salary plus one, because I'll talk about the $7,400 salary limit. Okay, comment salary plus one. So coming back to my own tax relief, right, I'm paying myself $85,000, so 20% mandatory contributions will be 20% times 85,000, which is $17,000 of mandatory CPF relief. Just to be super clear, doesn't mean if your annual income is $1 million, you just take 20% of that, which is $200,000 as your mandatory CPF relief, because I talked about the limit, right, which we will discuss in a separate video lah. Just note that the annual CPF relief cap limit is now $102,000. Okay, it doesn't mean $1 million salary you get $200,000 of CPF relief mandatory. Yeah, doesn't work that way. Then now let's talk about the non-mandatory one, which is voluntary CPF, be it cash top-ups or voluntary contribution to your Medisave. So there are two types. One is retirement sum top-up to your special account. One is voluntary contribution to your Medisave account. So one will go to the special account and the other will go to the Medisave account. And for myself, there is no retirement sum top-up RSTU to special account anymore, because I already reached the FRS like 2 years ago. I think more than 2 years, close to 3 years already. So you see, once the annual interest gets credited into the special account every year, it's more than 4%. It will increase to the next FRS level, which even exceed it. So there's no space to do RSTU. Okay, I've explained this in my CPF essay video already. But for VCMA, voluntary contribution to Medisave, I did contribute more than $5,400, mainly because the BHS cap, basic healthcare sum cap, was raised on 1st January this year. And the other $2,000 over dollars is more for my integrated shield plans for my family, as well as the CareShield Life premiums. All these that can be paid by Medisave for my family household, it's all paid under through my Medisave account. So everything gets deducted from there, and then whenever there's any deduction, I'll just top back up to the basic healthcare sum. So if you look at my overall total tax relief, if we sum up the non-CPF tax relief, that is $1,000 from earned income, $3,000 from NSmen, $9,000 from parents relief, and $7,328 from SRS, which makes it a total of $20,328. Then if we look at the CPF relief, it is $17,000 from the mandatory CPF contributions and $5,447 from the voluntary CPF contributions, and that makes it a total of $22,447 for total CPF relief. So if you add these two together, that will be $20,328 plus $22,447, which is a grand total of $42,775. And you will realize that this year round, my income tax relief is much lesser than 2023, right? And that's because it's already fully optimized. I do not need that much tax relief. Just in case you didn't know, annual tax relief cap is at $80,000 for personal relief. So you don't want to exceed it, or you don't want to do so many things such that you over contribute and then you don't get the tax relief benefit. So you realize that even though I've transferred my ordinary account to special account for CPF and reaching the FRS very early, and some of you are saving it for tax relief, that's why you all don't want to do that, then for my case, it's still optimized because I haven't even hit the tax relief cap. I still have so much more space to do VCMA, but I don't need to. Even for SRS, I also don't need to, because I run my own business and most of it is channeled as company profits tax at corporate income level. So I don't need to do all these personal things. Okay, I would rather optimize at the company level than at the personal level. But what works for me may not work for you, right? Definitely not financial advice, ma. That's why when I plan for my CPF OA to SA transfer and the FRS thing, I already plan it out very far already, like where I want to optimize, which is why it works for me. But it may not work for you if you're not a business owner or self-employed person. So when you look back, all these dots will connect together. That's why you have to plan for your own personal finance, which is more important. No one cares more than you. Which brings me back to this question: should you transfer OA to SA or not? I actually have this conclusion like more than 1.5 years ago, which I really did a topic right here, which you can watch my thoughts back then. I think it's still relevant right now, so go watch it.